All right, y'all, we back with another trade recap, and today I'm going to be going over how we can use data news releases like DataWix as our draw on liquidity. This is just a quick example. I've already made course videos going over basically how we trade DataWix and how those can give us an 80% win rate using the high and low of them, and how you basically can enter them almost guaranteed every single time, so you can cash that 80% win rate setup. But nonetheless, this is an example of another option that you can use and how you can use it with your bias, right? So for this day, I made about 8 risk reward or 5 to 8, 7 risk reward here. Took one loss earlier, and again, to mention here, this is a complete valid loss. I'm just gonna go in replay mode here real quick. Come back here, so it shows everything on my chart here. Oh my gosh, hold on. Should probably let me delete this real quick. Should probably not show those. Doesn't take out my chart here. Matter of fact, you know what? I'm just gonna remove this for now. Hide it. So, I don't like how the background says replay now. Okay, that's annoying. Never mind. I'm not gonna replay this. Hold up. All right, screw it. We're going in replay mode because I do want to show you guys something to the far left, and it'll probably be easier to access that on replay mode. I know it's kind of messy right now on my chart. Just bear with me right now. I have to hide all these other trades I took the other day. But here, anyway, my bias going into this day was we got into a 1 hour demand, and on the higher time frame, you guys know we always go from higher time frame to lower time frame, right? You can see we're clearly bullish, right? We're breaking highs to the upside. We're making higher lows and higher highs. So my bias was bullish because despite all this bearishness we've had for the past, 2 to 3 days, we tapped into the objective of price, which is going to be either the flip origin or a liquidity sweep. In this case, we tapped into the origin here. And yes, I don't know if price will 100% go towards the origin or not, right? We're just trading based on probabilities, and the probabilities of this origin holding is much higher because we are bullish on the higher time frame. So going to the day, my bias is already bullish for this day, right? We tapped into 1 hour. Obviously, I'm not trading at 6:27 a.m. really. I don't think I'm even up most times. Sometimes I'm up, sometimes I'm not, but it really depends. So anyway, we took a trade here. I took a short here. This is a clear loss here, right? We took out London session high, so I would think we can get at least like a small scalp or something towards here. I don't think I targeted here. I think I was targeting here or something like that. Anyway, I was looking for this little scalp or whatever, and I just missed it, man. So it is what it is. It's a low probability setup, even though we swept a session high or low. It's still counter trend, right? And counter trend trades, you tend to get manipulation before the real counter trend move. So that happened to me. We get -1R here. And matter of fact, this was a news candle release. So I was on Forex Factory, and I'm pretty certain on Forex Factory there was new news at 10 o'clock on May 22nd. That was like economic news release that's supposed to be scheduled. This was something that was just completely on financial juice, I guess, that came out of nowhere. Maybe it was on Forex Factory. Maybe I wasn't paying attention or filtering it properly. But nonetheless, we did have news that came out, and it was obviously red news, and it caused this massive wick. And so what do you guys know? We're trading data wicks, baby. So data wick here, we just dropped the high and low of the data wick, right? We took out the low already, but I was actually in a trade targeting the low anyway. In here, I took a POC entry after I basically got stopped out earlier on my short. I wanted to take another stab going short because obviously we have the data wick as confluence to take out the low, but also we have inducement right here below as a really nice clear draw on liquidity. And I go with some of my ETU members that were part of the team. Again, if you want to join a team, you just have to get the course, the 100 Reward course, or to get the private mentorship. The private mentorship, what it gives is exclusive access to a private trading journal, and I'll make a trading plan for you. And we also have weekly 1 hour calls. So that is definitely different than the course members, but nonetheless, both packages, you do get access to the trading floor. But anyway, here, we tapped into POC. I took aggressive stop loss option here. I discussed that a lot again in the content. Took a 3R trade real quick here. Did not go back to my break even or anything. I got basically lucky here in a sense. And we got into our TP, which is very clear, inducement. And here's another thing. We can anticipate us not coming back down to this POI. I'm not going to explain it in this free trade recap or whatever. It's gonna be one of the videos within the course. I discuss how we can anticipate price not coming back down here and taking out this inducement instead. So, new range, right? So we took out the inducement, and as soon as we took out the inducement, look at that reaction, right? Got a 3-hour trade here. And what do we have now? Now I am looking to further trade a continuation model, right? And my continuation model is very OP. It's very good because you can get a very high win rate trading the continuation model in the correct context, right? You need context when you're trading from the higher time frame. We're in the 1 hour demand. We already made a very nice reaction on the 1 hour to the upside, right? Breaking highs, holding lows, right? Where we didn't break past this low. We held this low here, made another new high. We have a lot of confirmation so far in our favor to go bullish. So yes, we're going to keep our bias bullish. Plus the data wick, drawing liquidity. This is like a 10 out of 10 setup here. Is this the right size? Shoot, it's bigger. Anyway, that's the data wick, right? And I took an IFG setup here based on certain things. I missed a small IFG here, actually. I missed a setup right here. We had a small IFG here. We did have a pullback here based on this candle, how it delivered, right? Again, I discussed that in the content, in the modules, how we can decide basically mechanically what are considered valid pullbacks, what are not. This is a valid pullback right here. And this would have been a valid IFG setup here. No matter how small the IFG is, as long as my indicator sees it, I'd take the IFG. It's valid. I just missed that, so I later took this one and stop. I covered basically below where I typically put it for the IFG aggressive stop loss option. You can for sure cover it prior to mitigation, or you keep it at the very low. I personally would not do this. This is the safest trade option. Don't get me wrong. This is the safest trade option. However, I'm gonna delete this real quick. This is getting in the way. However, you're just basically lacking the risk reward. So it really depends. I mean, you can make about 1.84 risk reward, so about 2 risk reward in 3. You'd be up 5 and -1, 4. You could be up 4 for the day, or you could be up 7. It's almost a double difference. I'm not gonna lie in terms of RR, and especially with the momentum, how price delivered here. It's not the best momentum, I'd say, but it's still like good because it's all bullish candles here in your favor. I don't mind risking this, right? And if I get stopped out here, I can always wait for a confirmation when price comes back to either mitigate here and maybe look for something on the seconds fractally to enter off of. Again, I have a video discussing in the course how you can take advantage of the seconds or how you can see the seconds time frame without even having access to the seconds. You can see what the seconds is doing on the 1 minute in a sense. And I have different types of ways you can confirm entries if you want more confirmation to enter instead of having a blind limit order. That's up to you, right? So took an IFG setup here and we targeted data wick and it was basically 4.8 risk reward, basically a 5 risk reward trade here. I usually target a little bit higher past external liquidity, you guys know, but this in the case I didn't. It just ran past my obviously TP. I definitely should have easily targeted higher, but it was a data wick play, so I just targeted the exact wick right there. And it worked out nicely. So whenever you find your data wicks or data wicks, whatever you want to call it, usually it comes from Red Economic News Folder releases on forexfactory.com. Just check that whenever news releases, free pro tip, and just draw at the high and low of the data wick, and those can be your clear drawn liquidities, especially if the drawn liquidity of the data wick is in pro trend and it's also aligned with your high times drawn liquidity. You can consider that an 80% plus win rate setup. Just backtest it. You can see how strong these wicks truly work. And here's the logic. You always want some logic to help you understand and memorize these concepts, right? The logic is data wicks, whenever data occurs or releases, you think there's someone that's actually clicking buy and sell at that exact same time? No, it's ran by the 80%. A statistical fact I found, 80% of the market is ran by algorithms, whether that's retail traders using algorithms or banks, institutions, just retail people with tons of money. We don't really care who it is, but the point is, the fact is 80% of the trading volume is algorithmic. And so there's nothing wrong with saying that there is a market algorithm because it is basically 80% ran by algorithms. So it is algorithmic, right? There's not many people actually manually clicking buttons by ourselves nowadays, especially when you have very massive size accounts like hedge funds, institutions. They probably are in easily 7-figure, 8-figure positions intraday, and that's obviously not even a position I have. I don't even risk 7 figures into one position in a trade. That's like a lot, right? And even a lot, you'd be surprised how less of an impact it has on the market, right? This candle here could just be 10 million right here, right? So you'd be surprised. Some people say it's a big move, some people say it's a tiny move, but just looking at it from here, you think it's a tiny move. But when someone enters a position that moves the market like that, their entry, instead of being filled at the price they entered at the time, they're getting filled basically up here, for example, for 10 million. So that's typically how orders work in terms of liquidity. If you're just curious or wondering, when you have a large position account size, you will get a little bit of slippage. But typically, for most people, like retail traders like us, that's not really a problem that we should really have to really face whatsoever. Unless you someday grow your account to 9 figures, then be my guest. But at that point, you would likely need a different trading strategy, since the risk reward may not work out at the end. You'll just have to you'll figure it out at that point. At that point, you have way different problems, right? That you need to figure out. So you have good problems at that point. Anyway, forget about that rant. That's just how liquidity works in the market. So when these news releases, algorithms, everything, they already have their algorithms set to execute at that exact time news releases. And so that's when there's tons of liquidity in this one single candle. This one single candle has tons of liquidity. Sometimes data releases will have huge candles. Sometimes it will have smaller candles. We tend to preferably want a bigger data wick. The bigger the data wick, the better probability usually. If it's a very small data wick, it gives you a very small range to trade with, and unless you're on the seconds, it will be really hard to take a trade. Like, you guys see this? This is on the 5-second chart, by the way. This move definitely happened within 1 second. Okay, this is a 5-second candle. Who knows? It most definitely opened immediately in 1 second all the way up here and started moving around like this, up and down, and then closed above. And look at this, another 5-second candle that went 0.20%. That's a lot for 5 seconds. That's a lot. Usually my trades will be like 0.20, 0.30%, 0.40% of ES. This is a huge move for 5 seconds of price action, right? So the logic behind it is there's just tons and tons and tons of liquidity behind these data wicks. So that's why we want to use them as targets of liquidity. So hopefully that makes sense there. This is going to wrap up for this video. It's just going over again how we can use data wicks to our advantage, especially when it aligns with your drawn liquidity, and how you can capture these very high probability trading setups. And I'll see y'all in the free Discord. If you have not joined, please join the free Discord. I literally post my trade ideas sometimes for free members, but I do post almost daily in the obviously paid student group chat, my trade ideas and such, and my outlook on this market, things like that. And everyone else is also posting their trades, and I would love to have everyone else, join the paid community and see what's up. So I'll see you guys in the next video.